What is going on, everybody? It's Stas here. Welcome back to another video. So listen, we got a lot to break down in this video. We have earnings reports this week that I want to cover, different companies that are reporting earnings, right? We also have to break down the market, CPI data, and we have to talk about what I'm looking to do in these markets. So before we do, make sure to hit the like button and subscribe. We're trying to get 25,000 subscribers, and don't forget to get your free money for Moomoo, up to 5 free stocks, each of which could be valued up to $3,500. All you have to do is use that link down below, deposit at least $100, and boom, you get your free money. And with that being said, let's get right into the video. So check it out. Right now, it is about 7:20 a.m. And if you guys didn't know, every Sunday at 6 p.m. on the East Coast, that is when the futures market opens. So let's see exactly what is going on right now. So again, it's about 7:20. The futures have been open for a good hour and a half, and right now we have the S&P pretty much at break even. Take a look here, guys. These are the ES, or the ticker is /ES, E-mini S&P 500 futures. We're up about 1 point. Again, pretty much at break even, right? We have the NASDAQ futures. Let's see here. NASDAQ, those are up 0.2%, a little bit more, up about 27 points. We have the Dow futures pretty much at break even as well, up 10 points, up 0.03%. And let's see here. The Russell... Russell futures are down a little bit, but pretty much at break even. So in terms of the futures market, nothing really out of the ordinary, nothing insane is really happening right now. We have tech, NASDAQ, that is up barely. And again, the other ones are pretty much at break even. And honestly, guys, the futures market, it's not the best thing to just judge the next day on. You know, just because the futures are red, green, break even, it doesn't mean that's what they're going to be. You know, it doesn't mean the market the next day is going to do exactly what the futures market is doing the day prior, right? So keep that in mind. You know, for all we know, the markets could end up opening very green tomorrow. You know, these futures could go up in the morning. I mean, we really don't know. But as of now, break even all across the board except for the NASDAQ. Again, those are up. NASDAQ futures up about 0.2%. So let's take a look. Crude oil might be up a little bit, I would think, right? No, it's actually down. Crude oil futures are down 0.8%. Now we're trading at about 97.5 in terms of the price per barrel here. You guys can see. And upcoming right now for support in terms of crude oil, look at 60. Gosh, guys, why am I saying 60? Look at 90, 94. Look at 93, 94. That was support back, when was that? In the middle of March. So if we end up holding right around 93, 94, which as of now we are, even though the futures market, we're down a little bit. If we hold 93, 94, maybe we see some sort of rally towards the moving averages, top of the wedge. I don't know. We got to just wait and see. So keep your eyes on crude oil. And, of course, you guys know, maybe you don't, you probably should know, this Tuesday at 8:30 a.m., we are getting the March CPI data, which everybody and their grandmother knows this number is not going to be good. And I personally believe a lot of it, if not all of it, I mean, who knows really, right, until we actually get the event. But a lot of it could already be priced in the market. If you guys take a look on SPY again, this has been coming down a good chunk. It's been coming down a good chunk recently. Excuse me about that, guys. Sorry. Jeez, my throat. Let me get some water. Hold on. There we go. I'm filming this all in one take because it's already about 7:30 p.m. We're running a little bit late, so bear with me here, guys. So, yes, this is already down about 3.5% from the highs from about a week, 10 days ago. And if you look at the highs from about the beginning of June, SPY is down more like 7%. So I don't know if it's priced in necessarily. It could be, again, we don't really know, but the market knows about it. Let's just put it that way. The markets know the March CPI data. It's not going to be pretty. We had the Russia-Ukraine situation pop off end of February into March. We've had a lot of inflation in general, supply chain, yada, yada, yada. So this number is not going to be good. But again, we just have to see how the market reacts to it. You know, it's either it's heads or tails at this point, right? It's a coin flip. Who knows what's going to happen. But overall, that's what I'm looking at. I think it's going to be around 9-10% inflation roughly, which is, it's a lot. We're going to be at all-time highs, most likely. Inflation, we haven't seen this kind of inflation in 40, 50 years. So, yeah, watch out for that. Tuesday, 8:30 a.m., 9-10% is what I think it's going to be. That's kind of the consensus estimate. So what do you guys think? Drop me a comment. Make sure to smash that like button and subscribe if you haven't done so already. Again, we're trying to get 25,000 subscribers. And let's talk about some stocks now. Like I mentioned, we have a lot of companies reporting this week, and they're not the most glamorous companies, sexiest companies, whatever you want to call them, right? They're not. In fact, they're probably the opposite of that. They're not. They're not great. I mean, they're good companies, right? But they're not glamorous. So let's talk a little bit about them. And I think all of the ones we're going to talk about today, they report earnings this upcoming week. So number one, we have CarMax, KMX, which you guys know the markets in terms of the car market has been insane. It ran up a ton. I think used cars are still very elevated in terms of the price. I mean, we've seen the inflation. When you look at the inflation report, guys, look deeper into it, right? You see all the different categories. If you go to used cars and trucks, the inflation year over year is insane, even month over month. So, yeah, that's it's been wild. And CarMax obviously deals in this industry. And the crazy thing is, I mean, just talk a little bit more about these car prices. My car, I mentioned this before, I drive a Toyota Corolla, nothing crazy, a 2016. This car was $8,000. It was worth $8,000, I think, before the pandemic, or not, maybe not before the pandemic, maybe just about a year and a half ago, maybe roughly. And now the car is worth $12,000, something like that, $13,000. It's crazy. It's insane. I could sell that car and pretty much break even at this point because I bought it for that much money. So it's wild, and I've put a lot of miles on it. But that's just the reality of the market, the car market that we're living in right now. So KMX reports earnings on, let's see here. Again, it's this week. What day is it, though? On the 12th. So what is that, Tuesday? Right around the time the CPI data comes out. They report at 8 a.m. on Tuesday, and this stock is it's trying to break out. I'm noticing a bit of a bullish divergence. Look, the stock's been going down recently, obviously, but the RSI has been starting to trend up ever since the end of January, early February. So we're getting that bullish divergence. The stock on Friday went up over 3%, and it also closed above $100 a share, which is a pretty good sign. Now all we have to do is simply break the 180 SMA. 180 SMA is right around $105 a share. If that point breaks into 110, we go even higher, right? That could be where we do end up making a move. And again, we have earnings coming up. And mind you guys, this stock is down 35% from the $155 level it was at in November. So maybe earnings turns things around. Revenue, EPS, guidance, of course, like I mentioned during earnings season, guys, guidance is the most important, if one of the most important, if not the most important things. So watch out for guidance. And now let's talk about the banks. We have a lot of banks, financial institutions reporting earnings this week. The big dog is JP Morgan. JP Morgan, JPM's the ticker. This one up about 2% on Friday. And overall, let's be honest, this is very oversold. I don't want to say extremely oversold based on the RSI, but overall, in the past couple of months, the stock's down 22%. It's in a bear market. We're under both moving averages. We have the death cross, all that stuff, right? We're getting destroyed. We now got to get out of these moving averages. For this thing to reverse or have a shot at getting back up towards the top of the channel, it's got to start breaking the mid-130s, 135 into 140. And if 140 starts breaking, I mean, you guys see one alert here I have at 145. Let's put another one at 140. If we start getting into the 140s, that is where JPM is really going to start going towards probably 150. 150 is the top of this channel. So, yeah, keep your eyes on that bank stock. And I almost forgot to mention, they report earnings on the 13th. So that's on Wednesday, pre-market. Another big dog is Goldman Sachs. GS is the ticker. This one up 2.3% on Friday. And just like JP Morgan, and you guys probably know this already, the banks have gone down a lot. Just like JP Morgan, Goldman Sachs is down a good chunk. We're talking 25%. It's in a bear market. It's down more than what JP Morgan is down. And what we're also noticing is Death Cross. It's under both moving averages. In fact, just this past week on Thursday, it seems like Goldman Sachs just hit a fresh low. We hit $308. The previous low was $320. Before that, $328. Before that, about $369. So this hit a fresh lower low, took the recent lows out, which is not good. So we have earnings on probably the 14th. Let's see here. Yeah, 14th before the market, pre-market on Goldman Sachs. I'm going to set my alert at $340. And honestly, guys, I'm not rushing to get into these banks. This is one of the sectors, industries, whatever you want to call it, that I don't have much money in. I do own them through ETFs, I guess, because if you own ETFs, you own everything. Well, I guess depending on what ETF you buy. So I do own them via ETFs, but I don't own bank stocks directly, and I'm not rushing to get into them, again, like I said. But I am setting alerts, because if they do start breaking out above these moving averages, Goldman Sachs, $340. JP Morgan, let's take a look here. JP Morgan, $140, $145. If we start gaining some steam heading into this rate hike cycle, that we're going to get a bunch more rate hikes, 50 basis points, 25, whatever it ends up being, I think these stocks could end up bouncing back. So JP Morgan, Goldman Sachs, Morgan Stanley, MS is another one. Morgan Stanley is down a good chunk as well, 23%, well in a bear market. It went from $110 back in, when was this? Just in February, guys, mid-February, $110. Now it just hit a fresh low of $81, which again was a drop of 25%, bear market territory. So Morgan Stanley, they report earnings on the 14th pre-market. And mind you guys, banks report pre-market. If you haven't gotten that hint yet, the memo, all of them report pre-market for the most part. So Morgan Stanley is another one I'm not rushing to get into, but I will set alerts. I'll put one here. Let's see. Maybe I'll do one at $88. Mark is at or above. I'll do another one at $91 a share, which is right by the 180 moving average right now on the 4-hour chart. So two alerts, 88, 91 on Morgan Stanley. Another one, which I've mentioned to you guys many, many times on the channel, that I used to own this stock years ago. I got killed on it, sold it, took a big loss. It is it's Wells Fargo, guys. Take a look at good old Wells Fargo. This is up. Well, it went up on Friday 2%. And honestly, now that I'm looking at this chart, even though I lost a lot of money on Wells Fargo and I hated that stock for a good couple of months after that, yes, I'll admit it, I hated that stock. Now I'm all good. I have no problems with Wells Fargo. Look at this chart. This chart looks the best out of all of these bank stocks. I mean, again, JP Morgan looked like crap. What was the other one? Goldman Sachs looked terrible. Morgan Stanley, they're all downtrending, but Wells Fargo, which is freaking crazy because, again, I lost a ton of money on this and I thought it's the worst bank. The chart looks the best. Look at that. We're making higher lows. We potentially just double bottomed at the bottom of this channel. If I show you guys, look at that. We just technically double bottomed at about, where is that? $45 to $48 roughly. So this looks like it wants to break out. If we start moving, and mind you, this is still under the moving averages like the other bank stocks. That's one thing they have in common. But the fact that it's holding the uptrend, again, we're double bottoming. Now all we have to do is break $50, $51, and this thing could end up flying. So I'm going to put one alert at $51. And I'm going to be watching it. It's crazy. I still can't believe this chart looks the best out of all of them. It's wild because I thought Wells Fargo was the worst. But that goes to show fundamentals in the short term don't necessarily mean that, if the fundamentals are bad, the chart could be good. It's weird. It's just how it goes, guys. So watch out for Wells Fargo. They report, I forgot to mention, they report on the 14th. Pre-market as well, just like the other bank stocks. DAL is another one. Delta Airlines, guys. And this is one that I'm I don't want to say excited for because like the banks, I don't own any airlines directly, but I'm going to be interested because we all know COVID, it's dying down. It's pretty much, even though it's obviously still out there, people are getting back to normal with it, getting back to normal, which we knew this point would come, and now we're like really getting back to normal. So I want to see how these numbers look. And we all know Disney's been packed. The hot spots across the U.S. have been packed. There's been a lot of traveling. So Delta is going to be a company that we're going to want to pay attention to, right? The airlines. And, of course, there's other airlines. But this week we have Delta on the 13th, pre-market, which is in 3 days from now on Wednesday. And based on Friday's close, guys, Delta went down 1%. It closed under both moving averages, which is not the best because before that, we broke out of the moving averages. We were trading above them for a good little bit. We had a golden cross, and now things are reversing. So I like Delta. I'm not going to say I love Delta, actually. I don't want to say that, but I'm still watching it, and hopefully these earnings can maybe turn things around in terms of Delta getting back over these moving averages. So I'm going to put an alert at 38.50 for DAL here. Let's do that now. 38.50. Boom, boom. Let's go. The next one here is FRC, First Republic Bank of San Francisco, looks like here. This one has also been going down. What else is new, right? Look at this. From 220 to 150, it lost 30%. It's still down about 30%, which means it is well in a bear market. We're under both moving averages. We got the death cross. This does not look good, but with earnings coming up, rate hike cycle, maybe they do perform well. We have earnings coming up on the 13th in the pre-market, so I'm going to put an alert at 100. Let's just do 175. I mean, it's about $18 higher from where the stock is right now, but we'll be patient with them. Again, I'm not looking to rush into these bank stocks. And 175, if you guys take a look here, is right by the 180 SMA on this 4-hour chart. So FRC, watching it. Another one that I'm looking at for this week, which reports, is UNH, United Health Group. They have been crushing it, guys. If you've been watching my channel, which, out of curiosity, now that I just thought about this is a good question. If you guys have been watching my channel, obviously you're watching it. How long have you been watching it? Drop me a comment. I'm very curious. If you guys want to share that information, drop me a comment. How long have you been watching the channel? And UNH is one that I've been calling out. I called it out back when it was just 430, right? 450. It broke out. We called it out recently when it was at 500. It broke out. Now we're at 550. So this is one that, I'm not going to lie to you guys, it's getting a bit overbought. The healthcare stocks in general, UNH is one, J&J is another. It's breaking out. It's a bit overbought. Actually, J&J might run more, but one that's very overbought is AbbVie. Holy crap. AbbVie is very overbought. MRK is pretty overbought. Yeah, MRK is very overbought. So UNH, I'm watching it, but I'm also approaching it with caution because, again, we're overbought, very extended above these moving averages, and if they slip up on earnings, maybe they don't do as well, maybe guidance is not as strong, and they're already priced to perfection, maybe that's going to slip the stock up. And that's kind of what I don't want to say worried about, but that's what I'm watching out for. So if UNH starts coming down 500, 510, if it dips into the 400s again, 490, I would be very, very interested at that point in time. So let's see how we're doing on time. Speaking of time, we're about 18 minutes in. Let me take a little sip here, guys. Hold on. Again, we're running with this. It's 7:40. I got to get this video up. Alrighty, so the last stock for this video, guys, is RAD, which is Rite Aid. Ticker symbol, again, RAD, right? I don't know why I said that twice. But Rite Aid did actually, it did very well. And now that I'm looking at this, holy crap, guys, Rite Aid is getting in penny stock territory, depending on how you define a penny stock. Some people define it as literally a penny or 25 cents or 100 or 90 pennies or whatever. Some people say a penny stock's under $5. Some people say under $10. So it doesn't matter. All you guys have to realize is RAD is now under $10, which is nuts. and it went up 7.5% on Friday, but still it's under $10, guys, and it was over almost $20 a share just about in September, last September, which was not that long ago. It really was not that long ago, and it's down about 60% from that point. Let's see from all-time highs. How much is Rite Aid down? Jeez Louise, guys. Was Rite Aid, wait a second. No way. Was Rite Aid really a $1,000 stock in 1999? There's no freaking way. Comment down below, guys. Is that real, or is this just ThinkOrSwim, or I don't know. Sometimes it glitches or whatever. Was it really $1,000? There's no way, because if it was, the stock's down 99%, which is unbelievable. But let's see on this 3-year chart. 3-year chart here, it says Rite Aid was $32 just about a year ago. Wow, $32 a year ago, and now it's sitting at $7. So I haven't done a fundamental deep dive on Rite Aid, but the stock, granted, the stock being down 82%, that should tell you that something is probably not looking good under the hood. The fundamentals, there's just something not working there. So Rite Aid struggling, and we'll see if the earnings maybe help the stock in the short term. They might not. Who the heck knows? So watch out for Rite Aid. And it's crazy. Again, it's in penny stock territory. So I'm going to put an alert at 9. Let's put one at $10, a whole $10, guys. If we start breaking out of there, which who knows when that might even happen, or if it even happens, considering it's 32% higher from where we are. But I'm just putting it there because of the moving averages, guys. If we start breaking out of $10, that is where, we really could start gaining some steam. So, yeah, I mean, that's it. I hope you guys enjoyed the video. Again, it's a little bit late. I appreciate you tuning in. If you did tune in, make sure to hit the like button, subscribe, and what's the other one? Drop me a comment. Oh, yeah, join my Patreon. I forget the outro sometimes, guys. Join my Patreon, and make sure to get your 5 free stocks from Moomoo. It's literally free money, the best promo out right now. Use my link down below, deposit at least $100, and boom, you get up to 5 stocks. And get this, each of those stocks could be valued up to $3,500. Again, free money, link down below. I'll catch you guys in the next video. Thanks for watching. As always, peace out.